Well, let's talk to the international economist, Vicky Pryce. Vicky, welcome. We've talked about politics. Let's just focus on the economics for a moment. France's 2025 budget now clearly in limbo. What economic risks does France now face, particularly in terms of public spending and tax increases?
Well, yes, what France is going to have to do now, unless there is another attempt to get a budget through, if there is a new prime minister appointed by Macron, well, we'll see if that happens. Though, as we've been hearing, Barnier might stay on, who knows. Then what would happen is that the budget of 2024, which was already basically expected to bring a deficit with it of about 6.2, 6.5% of GDP, depending, by the end of the year, who knows exactly what it would be, but quite high, very high, considerably higher than is expected, because, of course, what the target is for that is about 3%, which is part of the EU Stability and Growth Pact. This budget of 24 will just have to carry through to 2025. Now, that will mean that the reduction which was anticipated because of those quite substantial spending cuts and tax increases that the budget that Barnier was trying to get through will not happen. It will mean that you're going to end up with a debt-to-GDP ratio still above 110% of GDP. Now, this may not be high by comparison to, say, Greece. It's higher than the UK, higher certainly than Germany, which is around 60%. And that, of course, is an issue for France in terms of how can it borrow to continue with that type of deficit financing that it needs to do. Now, I've been looking at what's happening to bond rates today. And the interesting thing is that they probably had anticipated all this, but they haven't really moved very much. They're around 2.9%, so for 10-year bonds. That is actually lower than what we have to pay here in the UK to borrow. And it really hasn't moved particularly. Yes, it's higher than Germany's, but it suggests to me that the markets are just waiting to see what's going to happen next.
Barnier's plan, of course, was to try and reduce the public deficit from 6% of GDP to 3% by the year 2029. How significant is the potential economic fallout from France's inability now to try to reduce the public deficit?
Well, the problem would be that they would have to do something even more drastic later on. If this carries on as is, and unless there is some miraculous growth in the economy, the growth forecasts right now are not particularly good. In fact, they've been downgraded a little bit for 2025. What this will require is some real resurgence in activity. And if that doesn't happen, then that budget is simply not going to be coming down as a percent of GDP unless there are some real radical tax increases later on. And of course, if you can think of any change of government that might take might happen, that might take place, such as a prime minister from, say, the left, or a change in president to a different one. What we know is that both the right, the extreme right, and the socialists do not really want any tax increases. They don't want to cut spending on health, for example. They want pensions to rise in line with inflation. They want the pension age to be reduced. Well, the prospect is that we can have a serious issue with France having very high deficits for a while to come, and the debt-to-GDP ratio getting even bigger. The question then is, will the markets, as I explained for the moment, are reasonably sanguine, waiting to see, will they then panic, and what will happen then?
Vicky, good to talk to you. Thanks so much for coming back on the programme. The international economist, Vicky Pryce in London.